Hello, my name is Troy White. I'm a financial planner that specializes in real estate investments. What I'm here to talk to you about today is investing in apartment buildings. Now, investing in apartment buildings can be a very risky but a very profitable venture. Every investor needs to determine their own investment criteria, weigh the pros and cons, and figure out which strategy is best for them. What do I mean by that? You may want to fix and flip properties, buy and hold, purchase multiple single-family rentals, maybe buy a duplex or fourplex, live in one and rent the others. You can invest in commercial property, industrial property, hotels, hospitality, multifamily, etc. The key there is you want to accumulate as many units as possible that are generating an income. But as I said, today we're here to talk about investing in apartment buildings. Apartment buildings, commonly referred to as multifamily. A multifamily may include duplex through 4-unit properties. However, from a lending standpoint, multifamily is specifically 5+ units. Now, multifamily or apartment building is simply a type of real estate that has multiple units in which tenants live in. Now, multifamily properties are all about cash flow, and the importance of cash flow can't be overstated in relation to a person's personal financial plan. Now, it's all about creating a reliable stream of income to build long-term wealth. Now, multifamily properties allow you a predictable income source. There's some things to remember. As with single-family residence, as a landlord, you only have one family to manage. Multifamily properties, you're the manager of potentially 20 to 100 families. Single-family real estate is easier to sell in the event that you're ready to get out of the property. It appreciates quicker than a multifamily property, and there are a larger pool of interested buyers of a single-family residence. However, in today's market, when a single-family residence goes on the market, that larger pool of buyers is what's bidding up the properties. So the price tends to escalate once it hits the market. Now, the value of an apartment building is not based on the appreciation that occurs over time. It's based on the net operating income that it provides to the investor. Multifamily properties typically have a larger pool of tenants than are available for single-family residence that you're renting out. And in terms of the pool of buyers for a single-family residence, there are more potential renters than there are potential buyers for that single-family residence. Multifamily properties or apartments almost always provide a more affordable housing option for the community. And your equity, you got to remember, in an apartment building, your equity increases every month automatically. What do I mean by that? As your tenants pay their rent, you pay the mortgage. Part of that mortgage is principal and interest. Well, as you pay down the principal, that increases your equity, and you just pay that principal down via the rents that you receive from your tenants. So, hey, it's the power of leverage that you're using there. Also, with a single-family real estate, when you have a family renting that home, you're 100% occupied. When that family moves out, you're 100% vacant. But if you have 5 to 20 units, even 5 units, one family moves out, you still have 4 families paying you rent. So the income may have been decreased. However, you still have at least partial payment on your expenses and your mortgage. And if it cash flows, you should have prepared for that event. Another thing, property values may decrease, especially the recent downturn we had. We know that property values decrease drastically. However, rents rarely decrease. When we have an economic downturn and the property values decrease, people start to lose their homes. What does that mean? They become renters. It increases the pool of potential renters, increased competition. As we know, supply and demand. That means rents actually went up. Another advantage of multifamily properties is that the economy of scale is far superior to those of single-family residents. You gotta think about it. If you are an investor and you bought 20 homes and you're renting those out, you had a potential need to repair 20 roofs. You may have 20 fences that need repair. You have 20 lawns that need to be cut. Whereas in an apartment building, you repair that roof once, you just did a repair that helps 20 families. You mow the lawn once, that's the lawn that's used by 20 families. You fix the fence one time, that repair helps all 20 of the families that live in your apartment building. That's what I mean by economy of scale. When you buy an apartment building, there's less competition out there bidding the price up for that apartment building. Like I mentioned earlier, with single-family residence, that property comes on the market, you've got 10, 20 people who are buying who are bidding these properties up, and often the winner is the person with an all-cash buyer. And most investors limit their potential by selecting properties that require conventional financing. And what I mean by conventional financing is single-family residence. Whereas there is financing available for multifamily apartment buildings just as there is for single-family residence. So how do you go about doing that? Well, you have to determine the area that has favorable economic conditions. Where do you want to buy your apartment building at? You have to contact a real estate agent or broker that has knowledge of that area and select a potential property based on the price, the condition, the location, and then you have to do the analysis. Now, when you analyze the cash flow potential of a property, there are some key terms that you need to be aware of, and you need to assign values to these terms. We'll talk more about them in later videos, but I'll just throw them out there for you right now. Things like NOI, net operating income, cap rate, that's the capitalization rate, cash on cash returns, GRM is gross rent multiplier. These are all questions that need to be answered. You have to assign a value to those. It's going to help you in the analysis to determine whether this is a good property or a bad property for your investment criteria. Then you get your broker to negotiate the lowest price with the seller. After that, you have to arrange the financing.